You're struggling to pass a prop firm challenge or even just to grow a small account, you keep blowing it, then this is a strategy for you. The strategy is very simple. It starts on the 4-hour time frame. As you can see, we're on the 4-hour time frame. We're looking at US 100 or NAS 100, whatever you want to call it. I'm trying to figure out what is the overall bias. A lot of people already from this probably has a predetermined assumption that this is probably going to break structure to the downside. Let me explain exactly why. If we start from this first portion here, it's already proven that, yeah, it's continuously breaking structure to the downside, at least from that minor structure bias, right? So naturally, it's okay to think that, okay, it's going to break structure to the downside, kind of like what it's been doing. Right? It's been creating lower lows, lower highs, right? That's what it's been doing naturally. However, if we take a second and look at it from, obviously, you got to scroll out and stuff like that to kind of get a better idea. I'm looking at it like, okay, it broke structure there and it broke structure, on that high point up there. So what I like to do is I like to draw the fib. Right? A lot of people don't really use the fib as much as they used to. I don't know if, that's slowly going away. Personally, I feel like it's one of the most useful things to have. I'm looking at it from, okay, it broke structure to the upside. That movement to the upside, it had a pullback, right? Into the 50%, right? So technically, if we look at it from the higher time frame, the daily, bias here, you can consider that as like, okay, this is the pullback. Yeah, we made our money, from it doing its pullback. But if you obviously pay attention to it, this actually has a good possibility of going to the upside. So when I draw that line from across that previous break of structure, now I'm looking for that structure to basically form the same thing on lower time frame. So now I'm on the 5-minute. I'm going to go ahead and mark this high right there, because obviously, broke structure to the downside, right? So I'm going to mark that high, let it play out a little bit. I'm going to go ahead and speed this up a little bit, but the number one thing that we should be focusing on now is what is the entry model, right? So I'm going to pull this line to the side, right? And I'm going to wait for the market to pull into it. Now that it pulls into it, that's where we can start our entry model. This model is literally a step-by-step process. So all you're doing is now that we're in the entry time frame, right? We're on the 1 minute. Now all we're going to look for is any sort of proof of what exactly? Order flow. Right? We want to identify, okay, where was the, transaction where it, broke structure, right? It broke structure to the downside and it broke structure to the upside there. Beautiful. That's what we want to look for. Now, while we identified that, let's go ahead and mark out our, in this case, it's going to be demands, right? Because we're looking for a long position here. And I'm going to mark out our fair value gaps. So I already identified the first one, fair value gap. That one, it's a magnet and I don't really like that the demand is resting above it. Everyone knows how I feel about that. However, doesn't necessarily mean that there isn't a trading opportunity here. We do have a demand that's forming here, right? And why do I believe it's a demand here? Well, simple. It's a transaction right here, right? What is a transaction? Basically, when there's, transaction between supply and demand, basically when you're trying to figure out who's in control. So meaning there's reaction. So in this case, a supply formed has reaction to that demand, right? And from that, obviously demand obviously shows that it's, obviously the one that's in control, right? So that's what we're looking for. Now, this is the hard part when you're trying to figure out where should you have your stop loss, in this case, because there's demand there, there's a fair value gap resting below it. Now, this is where the next part of the strategy comes into place, and it is risk management. The easiest way to explain this is if I know there's a fair value gap resting below that demand where my entry model, right, is going to be, then I already have an idea from the experience of, back testing and doing this for a couple years that I kind of know that this demand, yeah, it's going to provide me an opportunity from that reaction. Yes. But I know that overall the fair value gap is probably going to be the actual entry that's going to go for a long move, a long-term move, like more of like a intraday trade, right? These demands, ultimately, they may work in the short term, but they're most likely going to be providing liquidity for this fair value gap. So in a case like that, I know in the back of my head that I should be splitting up my risk. If I know I'm going to be having 2, maybe 3 entries on demand, maybe more, there may be order flow that forms, right, that provides liquidity for this fair value gap, then I know I should be splitting up my risk. So if you know your actual strategy is, let's say you risk 1% per trade, take it a step back, maybe risk 0.5% per trade. So in this case, okay, it goes ahead and it, taps me out. Unfortunately, it's sweeping it. Naturally, I look at it as like, okay, now if it sweeps that first one, maybe I should have had my, stop loss up, below the fair value gap for that very reason, right? But there's nothing wrong with that. I look at it as there's another opportunity here that's forming just because that first play could have been just because there were so many people already in that trade, right? Or that caught that entry. So they needed to sweep it out. So now there's less enticement of people entering on the following ones, which generally then creates more liquidity for this fair value gap to be the actual play that I'm looking for. For a perfect example, the market already sweeped it. We already have some kind of order flow. It broke structure to the upside, taps right into it. Beautiful. Now, this is a perfect example of how you could aim for that, previous high up there. But like I said earlier, more likely it will form order flow when it rests above that fair value gap. So when you have that in the back of your mind, you're thinking like, okay, yeah, you can take advantage of these little opportunities and make your money. Just put less risk. Kind of like what I was saying earlier. So we even have, a transaction, a reaction, right? All right, the market plays it. So I'm just going to speed it up a little bit just so, you guys can view it. It's a lot quicker, make it easier for everybody. And yeah, the market plays around a little bit. That's perfectly fine. That's perfectly normal, right? And eventually it will come back in because how I'm viewing it is it's generating liquidity right now. So after that, you should be seeing some form of liquidity forming. Again, taps into it, it's just following order flow. It's a standard thing. Now, this is where things start to get a little difficult and a lot of people struggle with this. And this is where you need to learn how to adapt in your trading strategy. So whatever the market throws at you, you have to be able to adapt and change things up. And in this case, yeah, I understand like, oh, I was waiting for it to sweep everything and tap into my fair value gap. It's not going to give you that automatically. And in this case, we missed out on that third entry, right? That's perfectly fine, right? It gave you all these opportunities in a little over a day, right? So how I'm viewing this is all liquidity. Now, the biggest thing that we have to focus on here is what has the market already shown us? And how do we grab that information and use that? So here I draw out that trend line. That's to highlight the liquidity. Beautiful. The liquidity is there. It generated for us. Now, like I said, always, and said at the beginning of the video, fair value gap is the magnet in the market, right? So that was my original entry, right? That's what I originally wanted, but doesn't necessarily mean that those previous trades weren't necessary. I mean, those are 3 different entries and over 2 days and 2 hours, 3 different trades, not considering that one trade that we missed, right? That's a great amount of, ratio of trades. If you really think about it, I mean, in most cases, this would be my whole week. There's nothing wrong with that. A lot of people think, oh, I got to trade multiple times in a day. There's some people that are like that. They'll be going in and out of like 10 trades in a day. You don't need that. My Discord is free in my bio. And if anyone needs extra guidance or support, links are all in my bio. Stay profitable.